I would almost dare say it is inevitable. $5,000 gold. I'm going to make the case for it here in this video as we explore. Really is not much surprise to anyone. I think most of us in this community are pretty bullish on it, but nonetheless, there are some hiccups we're going to see in the gold market. In fact, we've seen it recently. Gold going below $4,000 an ounce. And there could be more pain ahead. Who knows, by the time you watch this video, it could be below $3,900 an ounce. But I think that's just temporary. And I believe that very soon we're going to see it go to $5,000 an ounce. I'm going to be pretty specific about that based off of two different analysts about where they think gold is going to go. One is a huge bank and another one is a surprise. Stay tuned for that one. Gold prices, they were on a roller coaster ride last week and likely it's not over yet. We saw it surge over $4,400 an ounce. But let's take a step back to 2020 and each year let's see what gold did. It only had one down year. In 2020 it was up 24%. In 2021, it was down 6.1%. And then in 2022, and from there on out, it kept going up. And there's reasons for that. 1.4% in 2022, 2023, 12.2%, 27.4%, and here this year, well over 55%. This is pretty amazing to see the big move, and the reason why is because central banks have been holding gold, and then amidst everything else that's going on around the world, the geopolitics are playing a big role here for sure. Goldman Sachs, they have reconsidered their 2026 gold forecast as prices now take a swing, but it's not into the negative. The weak swings in gold prices have prompted analysts at Goldman Sachs to revisit their gold price targets. The bank was unfazed by the recent pullback, given its doubled down on bullishness. After a period of heavy inflows and extended momentum, a reversal and digestion is healthy for gold and doesn't change our multi-year structural bullish view on gold going forward, according to the Goldman Sachs analyst in a research report provided to clients and that has been shared with TheStreet.com. The major investment bank considered by many to be among Wall Street's best has seen its share of gold booms and busts since its founding 156 years ago. And here is why they think it's going to go up. This is rooted in three significant reasons. 760 tons of annual central bank buying in 2025 and 2026, above pre-2022 averages of 400 to 500 tons. About 360 tons of inflows into ETFs. And then a Fed easing cycle that will deliver 3 more cuts early into 2026. But that is now something that is in question for the December rate cut, whether or not it will happen. But even if it doesn't happen, I still think that this forecast will hold true. Gold ETF inflows have been particularly helpful to gold prices over the past few months. The Goldman Sachs analysis shows the ETFs have bought 260 tons of gold in the past 8 weeks as $33 billion has flowed into them. And so what do they think? This result of all of this is that the gold price target is $4,440 in the first quarter of 2026, and then rising to $5,055 by the fourth quarter of next year. So it's going to go up, and by the fourth quarter of next year, which is soon, in 2026, we'll see $5,000 gold. That's just one measure. Now the surprise is going to be who I'm going to tell you has made a bullish call as well. Stay tuned for that. Of course, gold is not the only yellow metal we should be looking at, but it's also another metal that's going to be probably even more important to our energy sector, and it's really not yellow at all, but people associate that color with it, and that is uranium. Uranium is actually priced in the markets as well. This video is sponsored by Homeland Uranium. It is a US-based uranium exploration company that recently secured a long-forgotten but historically significant deposit in Colorado. It was a site that was originally discovered back in 1979 before the nuclear industry had collapsed. But now uranium prices are up 141% over the past 4 years, and global demand is projected to surge another 28% by 2030. Homeland is positioned to ride what could be one of the most powerful commodity bull markets for this decade, with the supply chain tightening and renewed government support and skyrocketing energy demand from AI data centers, all combined to make Homeland a high-conviction, asymmetrical energy play, and few investors are paying attention. Even with Germany having demolished nuclear reactors as part of its phase-out of nuclear energy, there are currently 67 new reactors under construction for the rest of the world. A $2.7 billion uranium prize that was forgotten, Homeland was able to purchase it for pennies on the dollar. It's a 35 million pound uranium deposit discovered back in 1979 that was abandoned for decades. Homeland Uranium just locked it down for 15 cents a pound. That same uranium now sells for nearly $80. President Trump declared a national energy emergency and signed 4 executive orders targeting nuclear power and uranium production. The energy demands are going to be coming from data centers and artificial intelligence. And it's the only way out there to be able to provide the energy needs. Uranium is going to be needed for that. Wind and solar, they can't scale. They cannot keep up with this. And fossil fuels are now off limits. Tech giants like Microsoft, Oracle, and Google are turning to nuclear. Homeland holds the fuel they desperately need. 98% of uranium right now is imported into the United States, and it depends on hostile nations for uranium. Russia already banned the exports, and China is hoarding supply. Homeland Uranium controls a rare domestic asset in Colorado and is positioned to fill the gap. So check out Homeland Uranium. I'm going to post a link to the website down below where you can check them out and look at their investor profile. And I want to thank them for sponsoring this video. So now the next phase, who are the next folks that are saying that gold is going to hit $5,000 an ounce over the next year? Industry insiders, that's right. The gold industry itself sees prices rising to near $5,000 an ounce over the next year. According to Reuters here, the price of gold is expected to hit $4,980 an ounce over the next 12 months, up some 27% from current levels. And that's not out of the realm of a possibility based off of the numbers I gave you at the beginning of this video. Delegates to the London Bullion Market Association's annual gathering in Kyoto, Japan, they had predicted just last week. On track for its biggest yearly rise since 1979, gold's 52% growth so far in this year has seen its break through $3,000 per ounce in March and then $4,000 an ounce in October, both seen as psychological resistant levels by market players. Results of the LBMA poll were gathered in the organization's annual poll and shown to delegates at the conference. And what is it all about? Fear of missing out. Now, I always tell folks not to buy out of fear, and these are just opinions, but they're pretty big players with big opinions that I happen to agree with. It does not mean you should make a purchase betting on. That's right, you should not bet that it's going to happen, because there are certain circumstances where it may not happen. But I do feel pretty strongly, based off what we've seen since 2022, and not much has changed. Honestly, even if the war in Ukraine is settled by then, central banks are not going to let go of their gold, I don't think, because there's other reasons to hold it. Political tensions, U.S. tariff uncertainty, and more recently a wave of fear of missing out in the advance saw gold rallying to a record $4,381 an ounce in October. The LBMA predicted compares with Reuters' latest poll expectations, which delivered a 2026 average gold price forecast of $4,275 an ounce, as economic and geopolitical turmoil keep the metal safe haven allure intact. A poll of delegates from around the world at the LBMA conference also predicted that silver prices would jump to $59 an ounce in a year's time. Silver's rise is pretty much what we've seen since 2010 as far as the flow and the move upward. Silver prices are up 62% so far this year, which is the most since 2010, after hitting a record high nominally of $54.50 on October the 17th. Due to strong investment demand and tight supply in the London spot market and elevated purchases in India. But nonetheless, that's what we're looking at there for silver. But gold is the key here, and I think it is quite amazing to see. And I agree with it. Now, if you disagree with it, let me know why in the comment section down below, why you don't think that gold is going to reach $5,000 an ounce by the end of next year. I hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.